I'm Rick Caro, and I just want to talk to you about how the IHRSA Convention for 2012 is going to be updated about the financial elements of the industry, and I'm delighted to tell you about this year's financial panel and some of the ideas that they'd love to share with you. This year at the IHRSA Convention, I have the privilege of being the moderator for the 16th annual financial panel that IHRSA has hosted. What this means is 4 different financial experts, affectionately called some of the Wall Street types, are going to share their thoughts and their independent perspectives about the club industry. I'm delighted this year to have, for the first time ever, a representative from Goldman Sachs on the panel, a fellow named DJ Belloc. And DJ has some thoughts that are interesting that I thought I just would share with you. He sees, in terms of a big economic picture, a high but slightly falling unemployment level, which is very attractive news for us because we think our membership levels in the club industry are very much related to unemployment. He also thinks that inflation will remain low and will not be a major factor for all of us. Consumer spending is rebounding, so that's a very positive sign. And the equity markets in 2012 are off to a fast start, and we also are buoyant about that. Institutional financing is available, especially for larger clubs, and at attractive rates today. The fitness industry, he thinks, still has a challenge in telling its story. So although the factors are favorable, we still have a story to tell and try to educate people about the industry, despite the fact that we think we should have explained it well previously. And the market volatility will dictate the availability of capital for this industry. Some of his conclusions are that operational excellence really matters. And this is nice to hear because often some of the financial firms bring in CEO types from other industries and think they can either learn the business or somehow bring in the outside expertise that they have and make a difference right away. He's indicating that that is not so clearly the truth. Potential exit transactions are likely in the future, and that means that some of the private equity firms who've owned clubs for many years now might be looking at an opportunity to finally leave the industry because there'll be someone interested at a reasonable price. 2 more conclusions. One was that consolidation opportunities exist. What that means is existing clubs will buy other existing clubs. And finally, some investors have been burned in this industry, but others have had significant success. So it hasn't been a panacea for everyone. The second panelist this year is a fellow named Matt Schaefer. Matt Schaefer comes from a private equity firm that invested in NEV, New Evolution Ventures, which many of you have heard of. It is the company that Mark Mastroff is now heading up. As you recall, Mark Mastroff used to be the CEO of 24 Hour Fitness before it was sold to its current private equity firm, Forsman Little. When he left, he decided he wanted to stay in the industry, so he has cleverly put together a number of different club companies and developing those. So we have companies like the UFC, Ultimate Fighting Club gyms. We have clubs like Hard Candy, clubs in other countries like Energy Fitness in Chile and Mexico. He has some supplier companies he's involved in under this NEV label, like .fit and some other supplier companies that he's created. So Matt Schaefer is going to talk about the fact that from a private equity standpoint, he has a view that there's lots of capital chasing money, but very few limited deals that would be considered to be good deals. So in effect, there may be a lot of suitors, but aimed at a very small number of deals. In addition, he said there are lots of intriguing club characteristics that he highlights, and we've heard this before, the recurring revenue. Because of electronic funds transfer, the money comes in on a predictable basis, no different than an office building or apartment building where a landlord gets rent every month. Attractive unit economics, that is, at the club level, we can create some very attractive numbers that impress private equity. And finally, we have a substantial cash flow coming in compared to many other industries. So those are very attractive. The other thing he highlights is that one of the lessons that he has learned is that you really need deep industry experience, and that's really critical to the success. So some of the private equity firms who have recruited top executives from other industries, retail, auto rental industry, in some cases from the restaurant world, hotel world, etc., have not been that successful in this industry.